The crypto world is called dicey for a reason, because there, even the heavyweights and crypto big boys like Bitcoin and Ethereum often take the hit. And just a few days ago, the general downtime in the crypto market wailed down on Bitcoin as well. However, rather than a loss, many people are seeing this as an excellent opportunity to buy more Bitcoin. But is this true? Why exactly is Bitcoin dipping? And is this a green light for the usual buy the dip philosophy? Well, in this video, we'll answer all that as we give you all the current Bitcoin market updates. But before we get started, like and subscribe to our channel to keep updated about more videos like this one. So, what caused the recent dip in Bitcoin? Yes, we know. Bitcoin topped almost $69,000 just 6 months ago. Today, its value lies between $29,000 to $30,000, just when everyone thought things would get better. However, this recent dip has a lot of things to blame, actually. But the most important thing to note now is that Bitcoin has joined the league of risk assets. And that, of course, is very troubling. So let's explain. We all consider Bitcoin, Ethereum, Solana, and other big coins in crypto to be a store of value. This means that their prices are often immune to the normal conditions of real markets. So factors like stock markets, inflation, and government policies were not supposed to affect them. In fact, the freedom from the influence of a centralized agency or government is the entire point of crypto. But somehow, Bitcoin seems to have fallen prey to these things. Inflation, taxes, government policy, and war. Besides that, the recent downfall and panic of Terra Luna sent a ripple effect that shocked the entire crypto network. And Bitcoin, being the grandmaster to other crypto sons, was also affected. So let's expatiate on these new Bitcoin enemies one by one, shall we? Number 1, inflation and the recent increase in interest sales. One of the major reasons inflation should not affect Bitcoin is that its minting is controlled by an algorithm. Normally, this algorithm has a total stop minting order of 21 million. That means there can only be 21 million Bitcoin in circulation ever. So even when the government prints more money that no longer buys the same quantity of goods, commodities, and shares, the value of Bitcoin remains unaffected. Or so we believe. But then because of this recent rising inflation, the Federal Reserve and other central banks resorted to increasing interest rates. Because of that, many investors sold out and liquidated their risk assets. And this so happened because of two things. For one, the increase in interest rates doubled the opportunity cost needed to invest in non-yielding assets like Bitcoin. As this cost grows, potential returns drop instead. Seeing that, many investors sold off their risk assets. According to them, they considered this selling off approach as a less risky alternative at this time of uncertainty. But because of it, fewer funds became available to invest in crypto, and so did the trade volumes. For cross-referencing, remember that shortly after the Feds proposed to increase the interest rate, the entire crypto market went down by 9.8% in one day. For Bitcoin especially, its overall drop reached almost 8.5%, and we can say the same for the stock market as well. Now, because of this drop, many experts believe that Bitcoin is simply like any other risk asset out there. Therefore, in the past few days, most crypto traders are keeping tabs on the stock and crypto markets simultaneously. This is because as more companies and countries adopt Bitcoin, its value increasingly becomes tied to stocks. Right now, both markets respond similarly to rising inflation and policies. But for the current crash in Bitcoin value, there's something much bigger that lies in the shadows. So, number 2, the Terra Luna breakdown. While the general crash was happening in the crypto world, Terra Luna, an algorithm stablecoin, lost about 99% of its value. In fact, Luna dropped from $112 to less than $1, and UST from $1 to 12 cents in just 1 week. In case you want to know what happened, we have discussed it extensively in one of our recent videos, but to note some points, we will talk briefly about some things here as well. Terra is a blockchain with 2 tokens, the Terra UST, aka UST, and the Terra Luna. As a stable coin, the Terra UST is pegged to $1, so at every point in time, it is $1 exactly. To protect this peg, a stablecoin algorithm was built. To work, this algorithm mints more UST by burning the $1 equivalent of Luna. When it reaches above the maximum limit, more UST is burned back to Luna. Before now, the system was believed to be so secure that even if the algorithm crashes, there is a backup foundation to help restore the peg. According to Du Quan, the founder of Terra, this so-called Luna Foundation has about $1.6 billion worth of Bitcoin. But just a week ago, the Terra Luna blockchain crashed so much that even the backup foundation couldn't help it. The matter keeps growing worse by the day. Entire net worths keep evaporating, and suicide talks became a hot topic on Reddit and Twitter. Now the problem here is that Terra is a pioneer among stablecoins as Bitcoin is to other cryptocurrencies. The hope in it was high, and people invested in it because of the profit they stand to gain by converting the coins to UST and depositing their money on Anchor. This Anchor is like a blockchain bank that keeps Terra UST for a Blossom reward. But then it crashed. When it did, many investors lost hope in both pioneers and new coins, so a good number of them sold out their tokens and coins, including Bitcoin, Ethereum, and Solana. That said, should you buy the Bitcoin dip now? Well, when the Bitcoin dip was boiling a few days ago, it tanked from about $31,000 to nearly $26,000. In case you don't know, that's the lowest that Bitcoin has ever come from the past 16 months. Sometime in 2021, it reached an all-time high of $69,000. So you can estimate how far down $26,000 is and should be around 50%. However, this recent dip is not as bad as the one in 2018, when Bitcoin lost about 80% of its entire value. Long after that, it has beaten the odds and broken its resistance level many times. In fact, Bitcoin has seen 8 50% drops since 2009, and because of that, many experts think that Bitcoin is still coming back up, and with full force even. Although for now, no one can say for sure if the dip is just a blip of winter or a long ice age for Bitcoin. But with the current low prices and Bitcoin's previous history of bouncing back, we believe you can still buy the dip if you have no Bitcoin asset before or you wish to gain more. As always, you need to do your research and weigh your options well. After all, this is the crypto world. Everything is a dice and a gamble. But here in this channel, we will always be ready to give you the facts that can facilitate your decision. So, stay tuned for more on our next video. Bye for now.